Hello everyone, welcome to Millennaires channel. I hope you are investing for the better future. Today we are going to discuss the types of investment available in India. So let's start with the types of investments. The first investment which is very famous in last especially in last few years, that is equity. Equity here means that equity shares, which represents ownership in a company that entitle its holders share in profits and the right to vote in the company affairs. Equity shareholders are also known as residual owners of the firm's profit after other contractual claims of the firm are satisfied and have ultimate control over how the firm is operated. Shareholders Equity shareholders are residual claim holders. Investments in equity shares reward investors in two ways, that is, dividend and capital appreciation. Investments in equities have proven time diversification benefits and considered to be rewarding long term investment. Time diversification benefits refers to the notion that fluctuation in investment returns tend to cancel out through time. Thus, more risk is diversified over longer holding periods. It follows that investment in equities offer better risk adjusted returns if held for longer time periods. Generally, there are two types of equities, that is listed equities and unlisted equities. Listed equities means the equity which is listed in the stock market, and unlisted equities means the equity shares of a private company which is not yet listed on the stock market. Next type of investment is fixed income. Fixed income is also known as debt instruments. These are contracts containing a promise to pay a stream of cash flows during the term of the contract to the investors. The debt contract can be transferable, a feature specified in the contract that permits its sale to another investment, which prohibits sale to another party, that is non transferable. Generally, promised cash flows, that is interest of debt instrument, is a periodic payment, but the parties involved, that is the issuer, can negotiate almost any sort of cash flow arrangement. Debt securities are issued by companies, local municipalities, state and sovereign governments to raise money to finance a variety of projects and activities. Debt instruments can further be classified on the basis of issuer that into government debt securities and corporate debt securities, where the issuer is a non-government entity. In India, government securities form the largest component of debt market in India as well as the world over. There are basically two type of debt or fixed income security, that is issued by the government and corporate debt securities. Debt securities are also classified based on the yield, that is higher or lower yield, and the investment grade. The third type of investment is commodities. Investment in soft commodities which are grown like corn, wheat, soybean oil, sugar, and also used as inputs in the production of other goods. On the other hand, hard commodities which are mined like gold, silver, oil, copper, and aluminium are other investment avenues available to investors. Soft commodities are perishable, hence, they exhibit high volatility in their prices. These commodities are subject to higher business cycle risk as their prices are determined by the demand and supply of the end products in which they are consumed. Soft commodities have historically shown low correlation to stocks and bonds. Hence, they provide benefits of risk diversification when held in a portfolio along with stocks and bonds, that is, fixed income. Prediction of weather is an important factor while investing in soft commodities. Exposure to these commodities can be taken through derivative contracts like forwards or futures. Hence, investors must carefully understand the risk involved in the same. On the other hand, prices of hard commodities are determined by the interaction between the global demand and supply. Hard commodities like gold and silver have been the investment avenues for centuries as reserve assets. Due to its global acceptability, gold has acquired the status safe haven asset. It is viewed as an attractive investment in times of economic uncertainties and geopolitical crisis. For example, the period which we are seeing in last 1 year. Gold has shown diversification benefits historically. Unlike most of the financial investments, commodities do not generate any current income, and the investor in these commodities would have to count only on capital appreciation. Before we move on to the next type of a commodity, don't forget to subscribe our channel for more learning on investing. The fourth type of investment is real estate. Real estate is the largest asset class in the world. It has been significant driver of economic growth. It offers significant diversification opportunities. It has been historically viewed as a good inflation hedge. Investor can invest into real estate with capital appreciation as an investment objective, as well as to generate regular income by way of rent. It is usually a long-term investment. Real estate is classified into two subclasses, that is commercial real estate and residential real estate. It can be further broken down into terms of tier 1, tier 2, tier 3 cities. Real estate investment often involve large commitments in terms of time. Real estate funds or real estate investment trusts, that is REIT, have emerged as a good option to enable investors to take exposure to this asset class with similar outflow commitments. Next type of investment is structured products. Structured products are customized and sophisticated investments. They provide investors risk adjusted exposure to traditional investment or to assets that are otherwise difficult to obtain. Structured products greatly use derivatives to create desired risk exposures. Many structured products are designed to provide risk adjusted returns that are linked to equity market indices, sector indices, basket of stocks with some particular theme, currencies, interest rate, commodities, or a basket of commodity. Structured products can be designed for short term or for the long term. The terms can be customized to meet the requirements of the investing community. These products require investment of large denomination. They may offer investment protection from 0% to 100%. The performance of the structured product is largely driven by the underlying strategy subject to market conditions. Hence, they must not be taken as capital protection or guaranteed or assured return products. And the last investment or the type of investment is distressed securities. Distressed securities are the securities of the company that are in financial distress or near term bankruptcy. Investors can make investment in the equity and debt securities of publicly traded companies. These may be available at huge discount. However, investments in them require higher skills and greater experience in business valuation than regular securities. These securities can be considered from the perspective of diversification of risk. These securities are also referred to as fallen angels, and many type of funds and institutional investors are prohibited from holding these securities because of the high risk involved. It is a popular investment strategy among hedge fund managers as they have deep experience in valuation and credit analysis. And lastly, other investment opportunities. It includes art and paintings, and rare collectibles are emerging as an attractive long term investment opportunity. This category of investment has been generating moderate returns in the long term. It also has low correlation with the financial investment like equities and bonds. Hence, it provides a good risk diversification benefit. However, these are big ticket investments. Also, art or paintings is not a standard investment product as each work is unique. The market for the same is unregulated mostly. These investments do not provide any income, and just like gold and capital appreciation is the only way of reward. In terms of liquidity, this category is relatively more illiquid. To make the rewarding investment decision, specialized knowledge in arts or paintings is more crucial than in traditional financial assets due to higher level of information and selection problems. So these are the types of investment which we have discussed. I hope this video must have given you clarity on the types of investments available in India. Do send us any queries or doubts regarding this video in the comment section. See you soon with another detailed video on different aspect of investing. Happy investing and thank you for your time.